Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a valuation expert in St. Louis, Missouri. I have the pleasure of discussing the impact of COVID-19 on business valuations and this concept called EBITDAC, so EBITDA with a C, with Achille Ekeu, a business valuation expert in Washington, D.C. I think a simple place that we can start is how is the pandemic really impacting small business valuations? Can you kind of walk us through some of the things that people are seeing?
Mm-hmm. Right. So this is a new normal. It's becoming a new normal nowadays. When this pandemic hit us back in February, we remember the stock market went down. Everything went upside down. People were really surprised by the impact of that virus on our society, and it really has not changed till today. We're hoping that it was going to be gone by this time. But it's still lingering, it's still around. There's even a second wave that is still wreaking havoc in our communities. And so it's the impact on small business is absolutely devastating. It's amazing how, despite all the efforts of different states and the federal government and business owners, investors, we're still feeling the pain of that virus. And the impact of that virus on business valuation is even more devastating because people are losing, the wealth that they built over time in their businesses. So the way to really analyze the impact of this coronavirus on business valuation is through three metrics or three drivers that are drivers of value. That would be cash flow, that would be growth, and that would be risk. So we're going to talk about those three different aspects of the impact of coronavirus.
Well, and I think that part of the issue with small businesses, just like you identified, is we all thought this would be over. Mm-hmm. And so now we have a longer time frame with which to deal with it. But in general, though, in the business valuation community, we've all agreed that business valuations after December 31st, 2019, that was the last date that we could possibly have not known about the pandemic, right? So this date becomes important because anything after kind of January 1st, 2020 and on, we have to take into account the effects of the pandemic and COVID-19 on current cash flows and on future cash flows. So, I mean, that becomes important in the valuation community, and that's why everybody's talking about this.